All right, so we are slightly negative this morning on the futures on the ES chart, with price kind of just moving sideways here since yesterday's close. It looks like a possible micro flat off of the low that we saw into yesterday's afternoon, but price so far is still above the prior low at 28.11 that needs to break in order to signal the next local top in place and likely the start of a corrective B-wave pullback. As mentioned yesterday, if we are starting that B-wave pullback, price should come back down at least to the prior lows in kind of the 2790 region, if not down to a 382 retrace at 2777. However, I do think we'll see a shallower B-wave pullback rather than the deeper one that would otherwise, take us down to a 618 retrace or 50% retrace, and that's basically just based on the individual charts within stock waves and world markets that I track, which a lot of them seem to be positioned fairly bullish in the immediate to intermediate term. So again, we have a completed 5-wave structure, it seems, off of our late June low, which can count as wave A of the larger third. So B-wave pullback here would make sense. The alternative, as long as we are still above 28.11, is that price wants to make one more attempt at reaching this 28.37 fib above as a slightly larger wave 5 of the parenthesis A wave, and then we reattempt that pullback and consolidation as the parenthesis wave B. So we'll see whether or not we can come down a little bit further today, crack 28.11, and get this corrective pullback as wave B started, or if price is going to show some strength instead and again possibly make one more attempt at 28.37. Moving along to the gold chart, price has followed through to a new local high here above the one that we saw yesterday. So far following expectations after that micro 5 waves up that we had off of the overnight low the other day. So price is starting to fulfill at least the minimum expected upside here, close to a measured move. Again, that was, at a minimum what we thought we were going to get from this micro 5 waves up here. So that fib is approaching at 1234.50. We'll see how we react to that. But again, our larger move here, larger bounce off of last week's low is still a very clear 3-wave move, and therefore, if we are developing anything bullish off of last week's low, it does seem limited to a larger leading diagonal structure, where this would be A, B, C as wave 1 of the LD, and this is now starting wave 3 of the LD. So typically in a leading diagonal structure, if we are going to continue to fill that out, your wave 3 targets between a 100 and a 1382 extension, with the 1236 being the most common. So that would be at 1247, 1248. So this would likely, unless it's really going to extend here, still just be wave A of 3. You get another pullback as wave B of 3, and then head up to that target region for wave C of 3. So that seems to be, again, if we're developing anything bullish off of last week's low, what we're limited to based on that very clear initial 3-wave start. The alternative is that it is just a corrective bounce before setting up another lower low. This could just be an A, B, and now C wave in development. Our larger measured move target is at 1242 as the next resistance above the smaller degree measured move target right here at 1234.50. So those are the two main levels to be watching to the upside here to see how price reacts to. If it is another larger corrective bounce and we are going to see another push lower here, a lower low, 1200 still does remain our next support underneath, if that is seen. Similar situation here on silver. It has made a new local high, although not showing quite as much strength today, at least, as gold. But the same option here, if we are developing something bullish off of last week's low, it would be limited to a leading diagonal based on that clear initial three-wave start. So this would, on this chart, you can actually easily just call this the A and the B already in place, but based on the gold chart, might as well apply something similar there, counting this as wave A of 3 still. So you pull back in the B wave before heading up in wave C of 3. So again, this is kind of the path that would need to play out if we are developing something bullish off of last week's low. Otherwise, the alternative remains just another corrective bounce here as well, with 1570 as our next main resistance above, possibly filling out a WXY combination structure. And if we do see another push lower here on the silver chart, 1483 remains our next fib support underneath on this chart. As for as for GDX, a measured move on this chart would take us up to 2179 would be the 100% extension. That's kind of just underneath our prior local highs here as micro fourth, which we've mentioned is the next hurdle to clear if we're putting in some sort of lasting bottom here, more than just a small corrective bounce. So getting kind of back above 2190 overall is the next step. If we're going to be holding this possible leading diagonal wave 1 and then wave 2 pullback that was fairly deep. Otherwise, another corrective bounce setting up further downside can easily take us back to retest prior February and March lows. And if that breaks, opens the door to round 20 as the next main fib support underneath there. So good amount of work cut out for all three charts if we are putting in at least some sort of lasting temporary bottom here, but still in the very early stages of that and need to clear a lot of resistance to open the door to sustained upside. Next up on the crude chart, price so far has held what looks like micro three-wave consolidation after yesterday's high. So this continues to look good for further near-term upside to fill out our wave C of the circle B wave flat. The initial structure here does look like a micro three wave, so this could be an ABC up as wave 1 of an ending diagonal C, and consolidation as wave 2 of that ending diagonal C wave. So again, this may see some overlap and a little bit more choppiness rather than a standard impulse to fill out that C wave, but 70 to 71 is still the target region above to be reached, ideally closer to 71 before wave C of the parenthesis B wave completes. It is even possible that this ends up turning into a triangle for the B wave to just push further sideways, but not quite get all the way up to 71. Either way, I would like to see us consolidate a little bit longer in the B wave before heading down in the blue wave C of this fourth. And then finally onto the dollar, we are still above that recent low that we saw on Sunday night. Again, it still can count as a micro fourth wave bounce in an impulse down from last week's high, setting up at a low as micro fifth wave into round 94, but starting to look less and less likely the longer it takes to see follow through of that outcome. So the alternative is just three-wave decline off of the high that we saw last week that is already complete as either WXY for the wave 2 here in blue, so that wave 2 already in bottom for the larger ending diagonal fifth that could still take us to a new high, or just ABC down as the start of a corrective pullback if a more significant top is in place, but we ultimately need to take out the July low to confirm that, and it validates any further immediate upside as that blue ending diagonal fifth. All right, a couple of requests, starting with Win. So Win filled out our larger flat here with wave C down from that May high into the expected target region, has since bounced in what can count as micro 5 waves up with a corrective looking consolidation so far. It's fairly shallow at this point, not even a 382 retrace, so there is certainly still room for further downside before this consolidation completes. 160.57 down to 156.85 being our standard 382 to 618 retrace that may be tested, but that should set up at least a measured move, if not a micro third wave to the upside. So we'll see how it then reacts to a 100% extension, assuming we hold and get some follow through higher from there. Baidu, I am still tracking the possible ending diagonal structure off of the February low. Under that count, this may be a one to start to an ending diagonal C wave within that third. That third, based on fibs, can kind of take us up into the kind of 300, 308 region. As long as that recent low holds. Let's see, GM, I believe, reported this morning. What was the results? What are they trading at? I haven't taken a look at the pre-market data yet. Anybody have that number? 37.42. So as mentioned, going into yesterday's close, posting the ER updates, there was room for further downside in the B wave. It's beyond a 618 retrace as far as setting up any sort of long trade to the upside. I personally would wait for at least a micro 5 waves up off the low, if not the full wave 1 and 2 of that C. And then BA, I believe, is also trading lower this morning. Anybody have that number? $348. Thank you, Matt. So just getting a larger consolidation or pullback off of our high here, which can easily be either wave A of this 3 or just wave A of a larger A wave within that third. So still cooperating with the ending diagonal fifth there, shown in blue. And this pullback is testing around the 382 retrace. So you do even have room for a little bit lower here, down to 618. 340 maybe if needed, but kind of should hold between the 382 and the 618 as a corrective pullback to set up either wave C of 3 or wave C of a larger A wave to the upside there. EXTR is so far turning out from where it should, following a corrective wave 4 pullback and now potentially starting that fifth up to around 19 or 20. Early stages of that initial move, though, so do want to see this fill out a little bit higher. It could be a little bit better looking as far as 5 waves up, but you can certainly get there. 1, 2, 3, 4, and then 5. So it may consolidate a little bit further here near term with support between around 847 and 814, but ideally that will hold to then continue to unfold a larger degree 5 up, which should then be wave 1 of that fifth. BBY still should be able to fill out one more higher high into around 90 next as the wave 5 of 3. So this may be one to start developing for that fifth, which, if so, could, unless an ED, maybe even bring it slightly beyond 90. The alternative here is that the wave 4 is still in progress as a possible triangle, and then it can fill out a little bit deeper from here as an E wave, but should hold above the prior May low, even if a triangle. MCK overall, the bounce here does look corrective, so setting up further downside, unless turning into an even larger flat, where this is just A wave high, this is a B wave, and we get a C wave back up into the upper 190, 200 region again before rolling over. But otherwise, if this wave C has started, expect it to come down and fill out the rest of this primary fourth wave. WHR, we took a look at yesterday. Technically, as long as this January low in 2016 is still holding, a 1-2 off of there remains valid, but it has had multiple opportunities to put in a low and hold that setup, and continues to fail to do so, with the most recent move lower, another shot across the bow. So not personally a chart that I would recommend trying to catch, knife catch here and assume that it is going to hold and resurrect the setup. I kind of have moved on from WHR personally. And I think there was a request yesterday as well for Tesla. So Tesla did get a slightly lower low compared to the one that was made earlier this month, but otherwise still above the 618 retrace that should be holding at 287.50 for a corrective pullback as either degree B wave here. So need to see it get back above the prior high at 328 if it is putting it at bottom and starting either one of these C waves to the upside, but as long as we're holding support, that bullish setup remains the ideal outcome here. All right, that should address all of the questions and requests. I will see you guys a little bit later for the video around noon. Otherwise, enjoy your day and good luck trading.